All right, gang. Happy Tuesday. How's everyone doing today? Welcome back to the live trading room. The New York session, London session was early. If I didn't see you guys yesterday for the Q&A, hope you had a great weekend, and I hope you're ready for a great week ahead. Welcome also those on YouTube and TradingView for the live stream. If you guys are new, I live streamed the first trading idea of the day, and then we kick them out and go on with the rest of our analysis. Had a lot of setups today that were kind of okay, a little bit of a tough one to choose from, but I think we're going to start with, funny enough, a lot of the setups are on pairs that I don't actually watch, which is the Swiss pairs. We're going to start on the Swiss pair because I think we're at an interesting decision point, and it offers a potential trading opportunity no matter what type of trader you are, whether you are a counter trend structure trader or whether you are, let's say, a directional continuation trader. So let's get straight to the point. Let's look at dollar Swiss. By the way, if you're browsing this market, the markets this morning, and you saw some wild stuff and you're wondering what that wild stuff was, it was because of the RBA. Any of you guys look at any Aussie pairs today? And refresh your computer thinking you had some type of glitch? Nope. It was an interest rate decision, one that was a little bit more aggressive than the expectation. So the markets went bonkers. This was also, 12 o'clock, 12:30 a.m. my time. So very early if you're in the UK. So also a time where there's not a lot of liquidity in the market. And again, we used to see this a lot more with Australian pairs. Whenever news comes out in the Asia session, usually more like if it's like 8 o'clock p.m. U.S. time, they're escalated. They're bigger than normal because there's just not a lot in the market at the moment. So you're not going crazy. You do not need to call your data provider. You are seeing the correct thing. So let's head over to dollar Swiss. Dollar Swiss has actually gotten to a point that we were interested in before, but never, we kind of consolidated afterwards. But you see this little level right here, this little pregnant pause, as we call it here on the daily, meaning that we've had 1, 2, 3, 4, 5 bearish candles in a row with that one little green indecision candle in the middle. What do you think that indecision candle is going to look like as we go down to a lower time frame? Is it just going to be a candle, or will it look like something else? It is going to look like not accumulation, but consolidation. I think that's what you meant, Evans. It's going to look like consolidation, right? So it's going to be a little level of structure. This is going to be our most recent level of structure. If we look left, right, we did the same thing over here, right? Not as much as a pregnant pause, but you can tell the market kind of came here, retraced this level, pushed up, pushed down, hit this level again before finally escaping. Look left, structure leaves clues. One of the best bits of advice and cool sayings that my mentor told me, and it is probably the thing that has held true for me the longest in trading. It is just look left. Structure leaves clues. If you want to know where price is likely to go, if you want to know where price is likely to be interested at, look left, find levels of structure. So as we work our way down from the daily and we come up to the 4-hour, you're going to see we're fighting right at this level of structure already. Now, what's interesting here is that we had the basing off. This is what we looked at a while ago. We thought we were going to see a continuation down. We saw a small one, but not any chance to get involved, really. We saw a little bit of a rising channel here. And typically, this is where you would expect the relief, right? So this area of structure is not just a line. We know it's a zone, right? We could look from the bottom of our zone like this. If I can get my box, there we go. And the top of our zone being like this. This is that area of consolidation. And we started putting in really an ascending channel right as we got into it. And we know that, right? We look at the candlesticks, right? Obviously, the slope is less steep. The candles are smaller. If there were a volume here, my guess is it would be decreasing. this is typically a sign of loss of momentum in the market. Keep an eye out for a reversal. And then we shot straight up. But we're still in that zone, right? We're still holding this level of structure. This is going to be our main decision point in the market. The highs here at 97.64. Because if we can hold those highs, there is still an opportunity for shorts, right? Shorts can go down to a few different levels depending on how aggressive or conservative you are. If we violate that level, then we're looking for longs, right? So this is one of those situations where if you only trade counter trend or only trade structure counter trend, then you're only looking for the short move. If you only trade continuation, then you're only looking for the long move. If you trade both, what you're doing is you're working through that scenario using that if then syntax. If price action holds, then look for move to here. If price action violates, then look for move to there. And what you're doing is you're doing all of this analysis in advance, right? We're not doing this after the break where we're in like a trading state and we can panic and make emotional decisions because we don't want to miss out, right? Have you guys ever been in that situation before? Right? Where you feel like you're late to doing analysis. And when you're late to doing analysis, what do? You rush. And when you rush, you typically make mistakes, right? I remember being in college and I was a procrastinator and I used to wait until the last minute to do my assignments, and I would do my assignments and I would get a lot of simple stuff wrong because I'd be rushing and I'd forget to carry the one, or I wouldn't spell check, and all types of trouble, right? So we want to make a habit, right? In college, it's just a grade on the line. In the market, it's money on the line, right? So I want to be as careful as possible when it's hard-earned money on the line. But we want to do all of this in advance. That way, when or if the trading opportunity comes, again, we're not in a panic state. We already know the protocol. We already know what we're expected to do. Again, it is the difference. We talked about this late last week, I believe, not on the live stream, but it's the difference between stress and distress. As traders, we are always at a state of stress. Always. I don't think there's ever a stress-free time of trading. Maybe Saturdays. Saturdays when the markets are closed. But if you've got a position on, I don't know. But typically we're always in a stress-free or a stressful state. And stress isn't a bad thing. Just there are different levels of stress. There are high stress levels, there are low stress levels, but we're always in this stressful kind of alert type of state. That's okay. That's normal. We can operate through that. Distress is panic. That's what we don't want to be in. We don't want to be in a panic state because, again, we know when we panic, that's when we make emotional decisions, have emotional responses. That's when we get ourselves into trouble. So let's talk about, bring you guys into the mix here. Let's talk about short opportunities, right? So if price action holds this level, where would you expect price to retrace to? Shoot me some digits. I like it when you guys are involved. If you guys are new on the YouTube or the TradingView live stream, I like to ask you guys questions. My teaching style is not just you listen to me and watch me. I don't think you learn. Well, I know it's proven you don't learn that way. You learn more when you participate. Now, whether you participate is up to you. But scientifically proven, when you participate, you retain more information. When you teach, you retain even more. And again, apologies for the nose or for the voice. I got allergy attacks still happening here in the Stokes household. So I've got a tissue shoved up my nose trying to stop the leaky faucet. George says, I thought you weren't going to be here, George. You liar. You said you weren't going to be here this week. We were all excited. We were all excited not to have you in the room. And now you're here. There goes the party, guys. There goes the party. 9670s. Let's see what 9670s looks like. That's going to be, I bet I know where it's at. 9670s right in here. Today's my last day. Thank God. No. You know I'm just messing with you, man. We love you, man. You're one of the most kind of the hardest working traders we've seen out here in a while, which is pretty good. Justin over on YouTube says 96 flat. I'll get another line out there. Thank you, Justin. 96 flat. Even handle number, psychological number right down here at this inside level, or this not inside level, excuse me, this most recent outside level of structure as well, this little pullback. Well done. Someone else, Orsi says 97-ish, 97 flat, right around the rising channel. Also looking left here, the bottom of our level of structure there. And Dwayne says same thing, 96.80, so somewhere in the zone here, right? My projection would be this. I'm looking at who said 96.70s. Around that area right here is what I would think we're going to come to. Again, this little structure shelf right here. We can take a Fibonacci retracement. I haven't done this yet. Again, I didn't do too much analysis on this pair because I don't actually trade it, but looks like a 50% maybe. All right, so right around a 50% retracement as well at that level. Let's bring our volume profile in, see if there's any. There should be probably a big spike right in the middle of all this junk. Oops, sorry. Try that again. Oopsies. Oh, you're not liking me. Oh, sorry. Am I? Sorry. Look, I was used to Ninja. Yep, so right in the middle is going to be the bulk of our volume, so nothing much up in this area right here. But yeah, I think that's a decent area. I think 97 flat is a decent area as well. Again, we should go, if we go down to a lower time frame, again, we should see some structure being created right as that rising channel. So 97 flat's a nice conservative level as well. So conservative level right around 97 flat. I'd say more aggressive level down at 97 or 96.70s, and then a more aggressive level down at 96.40s or 96 evens for the short opportunities. Now let's look at the other side of the market. What about longs? If we violate this level, if we break and close above the highs here, right, we would identify a break and close above that would allow us to predict a movement higher, right? If we predict the movement higher, the next question we need to ask ourselves is, where do we predict that movement higher to go? This is that IPDE process. If you are new, it is a crucial step in your trading plan. Identify, predict, decide, execute. I promise if you implement that, it's going to change the game. So same thing. I asked you guys, let's get some predictions to the upside. If we violate, meaning if we break and close below, and we predict price is going to continue higher, where to is the next question. And then real quick on YouTube, because there's a little bit of a delay while you guys are entering that. Fabio says, target one, he's looking at 95.55. That's going to be right at the lows. I'll drag this line down so you can see it. 95.55 is right at the lows right here. And then target two, depending on the daily. And I'm glad you brought that up because I meant to talk about that and I got sidetracked, right? You also want to know your daily prediction, right? If you are someone that has a bearish daily prediction here, I don't personally, but everyone's analysis is different. If you've got a bearish daily prediction, you could be looking for a continuation downward as well. And if we are going to continuate, yep, made that word up, downward, the next stopping point is going to be right around here, right? 94, right in this area, right? 94.60s. So keep that in mind as well. Again, if you have an overall prediction that we're likely to continue downward, bigger picture, this can be another target for you. Thank you, Fabio. Justin says 99.20s for the long targets. Let's get some more lines in here. Change the color a bit. Would you just say, Justin, 99.20s? 99.20s right up here, looking at this inside level of structure, like the way you think. Graydon says, fantastic stream. Thank you, Graydon. If you really like it, you'll hit that like button. But thank you. We do it Tuesday, Wednesday, Thursday. You can join us if you want the full deal. Come into the live trading room over at Tier 1 Trading and spend hours with me. If you can survive me that long, it's tough. Orsi says 99 evens. To right around this same area, but adjusting a little bit for the even handled number. Ali says 98.70s. Ooh, again, Price is Right vibes here. Trump and Orsi by a little bit. I love the Price is Right, but again, that would be the end of my trading career. You know what would happen as soon as someone outbids me by $1. You know. Dwayne says 96.70. Sorry, longs 99.09s and target two. Now, Good point, Dwayne. So here's a point. 9909s. What do you guys think about that target? 9909s. Already smashed the like button. My man. Fabio says, to the upside, I would wait for a pullback, then take target 1 at previous structure and target 2 at 99.90s. What do we think about 9909s? Ali says a little bit over the even handle number, maybe much better to be a little bit low. So I would ask you this, Dwayne. Is 9 pips worth it? Reminds me like a mobster movie. Was it worth it? Not really, right? So risk reward just doesn't come from the literal risk reward that is on your chart. Risk reward, it's funny, this is crazy not to get too much of a rant, but like what trading has taught me about risk reward has carried over to the rest of my life. I don't know if any of you guys are like that. Like I feel like I have like the Google glasses, and like everything is like I measure everything I do, I measure risk reward. Like before I make a decision, like a little thing comes up in my screen, like it measures the risk reward, then I make a decision. I feel like a Terminator or a robot, because life is all about balancing risk rewards. All of our actions are, is the reward worth the risk? So we look at the even handled numbers for you guys that are not, or that are new, are psychological numbers that end in 0 zeros, numbers that end in 5 zeros, all the numbers that we like as human beings, because they're nice and easy for us to multiply and divide and all that fun stuff, right? Like 10s and 20s and stuff like that. That's why most traders do stuff where they put my stop loss 10 pips above the high. Like, why 10 pips, right? Because that's the first number that pops into our head. And of course, institutions, insiders know that. They know how we think, because trading is really all about crowd psychology. So they know we're undereducated traders, put undereducated stop losses, and they take them, and you become part of their liquidity. So the question we want to ask ourselves, right? And it depends on the situation, obviously, right? If you're a day trader, 9 pips is going to be massive. That could be half your profit. But in a situation where you're probably trading from, at minimum, 98s to 99s, 100 pip potential move, is an extra 9 pips, is 109 pips worth the risk of potentially seeing the market reverse at 99 even, at 100 pips in profit, and then roll over without you? The answer would be no for me. Now, this is something that actually took me a while to understand, because, again, my trading journey, for you guys that are new, I started off ridiculous and doing everything in the world, and it was bad. And then I kind of went full circle, and I got a trading mentor, a trading coach, who was military, and he gave me lots of structure. And I needed that, right? I needed to be in the military. I needed structure in my trading career. So I went super stubborn, mechanical, rules-based black or white, where it was like, if let's say I was taking like a 3D2 for a target, right? If the Fibonacci retracement is at 99.01, then I take the target at 99.01, right? Darren is like that too, because Darren's a robot, right? So I did that for a long time, where like targets were at like 99.03, and I wouldn't move them. Like price would be like hovering and teasing, and had a sign that said, "Hey, Akil, I'm about to reverse at 99 flat. I'm going to do it." And I'd be like, no, 99.02. And then I would get bit in the butt. Price would be like, all right, whatever. It would reverse at 99, and I'd be left there. But it was process over outcome. So I would reward myself for the process, which you should, right? You should. It was a good trade because I stuck to my rules. But what I learned over time, as I kind of evolved as a trader, is that we should be adjusting our rules, not on a trade by trade basis, right? We shouldn't be adjusting our rules on any particular trade, being like, oh, well, now I'm going to do it like this. That's a bad trade. But over time, we should continue to develop. We should continue to evaluate, right? We should continue to grow, and the trading plan is always evolving. And in my evaluation, and numbers don't lie, when you start to fine tune, when you start to see, right, a consistent pattern of trades being missed due to the even handle number and you being right above the even handle number, well, if you're smart, you start to make those adjustments where you say, you know what? In this scenario, I give myself permission. You got to add it to your rules, of course. In this scenario, I give myself permission to shoot for a little less profit to provide myself with a little less safety. Or you can do the rule that my first rule was just move stops to break even. Because I really didn't want to break my rules because I was so scared to go back to the undisciplined me. Like I was an early target taker, so that was like it's like all right. I hate to make this comparison, but like people that have addictions, right? They're not supposed to go to bars because that or be around like alcohol because it beginning stages it triggers it, right? So early profit taking was my biggest mistake. By the way, just did a video on it this past weekend if you guys want to see it on the YouTube channel. But early profit taking was my biggest mistake. So it was very hard for me to make a rule that essentially meant I would be early profit taking. So my first step was just moving stops to break even, reduce risk. If I'm going to get skunked out, at least I won't lose anything. Because I didn't do any active trade management at the time. I just kind of set it and forget it. And then eventually, as I got more mature, as I kind of got over my problem and grew confidence in myself as a trader, then I was able to make those adjustments. Now, I would say this: there is a limit. So you've got to find out that limit, right? You can't be like, hey, targets are at 99.50s, but I'm going to adjust them 50 pips down to that 99 even handle. Right now, you're making a mistake. So there is a limit to that, but I do think it is okay to make those adjustments in your trading. And a lot of those adjustments, you'll find that they come from analysis. And I'm not talking about just analysis of the market. I'm talking about post-market analysis, reviewing your trades, all of the small stuff that, to be honest with you, struggling traders never do. Struggling traders just wake up when it's time to trade and they turn off their computer and they do the same thing over again. But they do the same thing over again, not realizing that you're not fixing any of their problems. Good businesses always evaluate. Good businesses always evaluate and look for ways to improve. What are we doing right? How can we do more of what we're doing right? What are we doing wrong? How can we do less of what we're doing wrong? And that's how good businesses survive over time. They always evaluate. And in many cases, they bring in third parties to evaluate. So there's no type of bias. A little bit harder in trading because all of our rules are slightly different. But that's where having an accountability partner is good as well. Like George the other day he's been shooting over ideas to the chat saying, hey guys, what do you think about this level of structure? Just to get secondary opinions because sometimes we can be blinded by our own. So yeah, so I would adjust a little bit down to 99. I'm missing, I'm in a rant, so I just missed all this, all the chat on YouTube. We got some spammers over here, but real quick, Graydon says, on the fly, risk reward analysis can make or break your quality of living. Yeah, it can. Yeah, it can. To be honest with you, I would only take upside trades as trend continuation trades. For the counter trend, I would only be interested in $1 even to $1.50. All right. So we got our projections to the downside. We got our projections to the upside. Now we have to wait for the market to tell us the decision. This is going to be different depending on what time frame you're on. Obviously, if you're here in the 4 hour, you've got to wait about 1 hour and 6 minutes for this candle to close to see if we're going to have the violation above or below. If you're on the hourly, we technically don't have that yet, but you may have it in 6 minutes. And this is where it's going to be important that you have a time frame. What is your time frame that you need the violation on? Is it your higher time frame or is it the 4 hour? Is it the hourly? Right? If you don't know the answer to that question, you need to revisit that in your trading plan because it is very important because we can have a violation on the hourly, retrace, and hold on the 4 hour. And now you're getting two different signals and you're going to be in that kind of paralysis analysis type of deal. So good stuff. Good trade to talk about. Dollar Swiss. Any last minute questions? Live streamers, before we boot you off, again, do me a favor, hit that like button. Leave me a comment if you have any questions about this or anything else. I do read through them and I address them. Live rumors, same thing. If you have any questions, we're going to stay here, obviously, for a long time. But if you have any questions about the dollar Swiss, let me know. We can bring up a range bar chart too if you want to look at more of a a day trading aspect of it. But let me know. Dwayne says, if I were trading this on the daily, entry would have been at 96.57 with a risk reward of 1 to 1.4. What would you be trading on the daily? Are you bullish, bearish? What would be